Hello, hello, hello. How is everyone? It's good to see you all again. How is everyone? Obviously, it's been a while since I've been here. I think we spoke about it on our last session. Normally what happens for me around this period, Christmas-ish and New Year's, I do take a few weeks off, to be fair, just so that we can finally start to see a bit of volatility come through. We did speak about it on our last session, that volatility should basically come through around the middle of January, which it seems to have happened around the 10th, 11th, I believe is when it occurred, or 11th is when the markets opened, UK time anyway, and then that week is when sort of the volatility occurred. So yeah, good to be back. Let's have a little look as to what we've happened. So there's a couple of things that I want to talk about, and there's a few themes happening, right? Does anybody know kind of what is the market driver right now in terms of what has markets been looking at to make a trade idea? Because we shifted very, very quickly, right? But something has popped up recently over the last couple of days, and that has created the volatility. And that is all we focus on for the time being. Everything else right now does not matter. So what it does to us is it makes our trading lives a lot easier because we don't have to think about other bits of data. What do you think has been the thing that has popped up recently that has allowed the dollar to weaken, has allowed equities to sell off? And this is an important note because everybody here knows, right, that the correlation that the dollar goes up and equities goes down, and the equities goes up and the dollar goes down is still technically there, but it's only if context makes sense. And context happened because of, like what people are saying here, tariffs and a little bit of Greenland, I guess. Greenland's more into gold, but yes, mostly the tariffs is the main one. The reason I don't say too much on Greenland is because markets only care if it bleeds over into markets. Does that make sense? So yes, things can happen, but it only makes markets move if they feel like it will bleed into them. Meaning, suddenly it's now going to really affect data, and this is really going to affect the dollar. That's all the markets care about, right? They don't care too much about feelings. They only care about, is it going to impact us? So that's important to think about. Whenever you see things occur, wars, tit for tats, that sort of stuff, only think about, is this going to affect data? That's all markets care about. So, and sort of sentiment around, governments or countries. If it's not really doing it too much, it's not really going to be a massive driver. But tariffs, on the other hand, has been quite a big impact on markets. So let's have a little look then as to what we've got. So let me see if I can change my screen. It should be sharing it properly. Perfecto. So let's have a little look. Now, obviously, you can see the dollar selling off. Now, the reaction of a currency or the reaction of an equity tells you everything you need to know about whether or not it is important in markets, because this is important. If markets doesn't react to something, there's two things why that's occurred. Number one, they've priced it in. So they've bought the rumor, selling the fact. And number two, it's so out of the blue that markets have to suddenly front load something and get ahead and get into the trade. And to me, it's the second one, right? People wasn't really expecting Trump to come out and sort of threaten tariffs all across Europe. So therefore, markets had to front load all of this. And that's why we saw a huge gap on the dollar, which is this one here. If I just zoom in a little bit, this one here. And then it continued. And the question we have to ask is, does price action continue or not? And to me, yes. Why? Does anybody know why we would continue to see the dollar come lower, even though technically it has moved a decent amount? Does anybody know what you'll be thinking in terms of why would price action continue, right? Because from a technical perspective, we've moved a decent amount of the downside. So you'll logically be thinking from a technical, level, we have to see a pullback. But sometimes pullbacks don't happen. So we have to think, why wouldn't I see a pullback? Why wouldn't a pullback occur? Because this is important. And this allows you to understand whether or not a pullback is going to be very shallow, i.e. like what we're seeing now, or a bit deeper and then we sell off again. But for me, I see it more as being shallow. And does anybody know what you'll be thinking as to why that would be the case? Because this is a, I wouldn't say more advanced, but what you have to be thinking is more context of markets. And context in markets is more important, in my opinion. It's quite important. It's basically top 3 of everything. Context, context, context. So what would be the context in terms of data? Or in terms of what we've seen anyway? That's what we have to think about. And that's where the opportunity is. It's not so much following what price action is doing. Price action is a reflection of what has happened fundamentally anyway. So we now have to think, what is fundamentals going to do in the future? And we basically position accordingly to that. So none of us see this because Trump did not get the Nobel. True. I wouldn't be surprised. So the context of markets right now is, ask yourself, why has price action sold off so much? That's all you have to think about. So price action has sold off because tariffs has come through. Why has that sold the dollar off? Because it removes confidence in the US. That's why you've seen equity sell off and the dollar sell off at the same time. This is why context is important. Does investors want to invest into an economy when there's less confidence? No, of course not. So why would you buy equities and maybe buy the dollar? You'd want to be selling both. It's similar to what happened last tariff when it all kicked off in April last year. The price action's exactly the same, by the way. A huge reaction. And what markets then do is think, is this expected to continue? Basically, is Trump expected to continue with these tariffs? Is he still threatening these tariffs? And if he is still threatening it, then that allows the dollar and allows equities to come lower. That's all you think about for now. You forget about the data, you forget about Fed speeches, you forget about everything else. All you focus on is just Trump. That's it. And it makes your life a lot easier, actually, because it's basically one thing is all you're looking at. All you have to do to keep up to date is just look at news websites. It's that simple. Just look at Bloomberg, look at Reuters, look at Sky News, whatever news websites you want to use for financial news, use it. And if you don't see any news about Trump wanting to do some sort of deals, then you remain bearish the dollar. That's all you do. And it's that simple for now. When you think about it, it's simple, but obviously applying it to markets is completely different. But yeah, let's have a little look as to what we've got. Now, with the DXY, like I said, we did sell off a decent amount. We ask ourselves, does this continue? And in my opinion, yes. And if I just open up a ES chart as well, because I know a few of us trade ES, and it's pretty much the same, right? You're applying the same framework for the time being. Does Trump show willingness to do deals? If it's a yes, the dollar goes higher and equities go higher at the same time. So there's 2 trade ideas. Another one you can think about is gold coming in lower, because gold, one of the main reasons why it pumps so much is because of all of this tariff stuff. Well, why would it go lower? Basically just battling the whole idea of why it went higher in the first place. Just think, why did it go so high? Tariffs, right? Capital T. So for it to come lower, you're going to need tariffs to show, or Trump to show willingness to want to show deals, want to make some sort of deals. So therefore, there's 3 trade ideas for you. You see, like, fundamentals is not that difficult when you put it into layman's terms. All you have to think about is just, number 1, it's mostly the start of when you're learning is the most difficult, but it's about understanding what terms mean, understanding how to, what terms are important in terms of context of market. So like, for example, before tariff stuff over the weekend, it happened on Saturday, I believe, but before the weekend last week, it was all about the Fed. So all we had to do was just look at data that applies to the Fed, and everything else doesn't matter. And that's how you crunch down all of the rubbish you see on Forex Factory or Trading Economics or any other website you want to use for the calendar, of course, to only a handful of data that's important. And then you as a trader have to interpret whether or not this is going to affect the theme, affect the idea of the Fed, affect the idea of cuts. If it's a yes, you start to take profits. You start to go opposite to the trade direction. that's when you see pullbacks happen. So as a trader right now with Trump, it's very easy. You just focus on, is there any news? So that's what I'm saying. Because we haven't really seen any major news about Trump, we remain bearish the dollar, we remain bearish equities, we remain bullish gold until otherwise. And it's important to keep up to date. So that's why fundamentals is very, very important, because it gives you context for future price action. And that's what you should be using fundamentals for, by the way. Now, in terms of entries, I think it's a little bit difficult because we haven't got any supply zones here. Now, for those who don't know, I trade very, very simply. I don't try and overcomplicate markets too much. I just trade pure, simple supply and demand. And I'll add in like a whole number, like from trading euro dollar, I'll trade 115, 116, 117. If I'm trading GU, I'll be like, okay, there's a supply zone here on the daily that lines up with 130. Like, you want to keep price action as simple as possible because most of your work is coming from fundamentals. That gives you direction. Technicals is just, where is price action seen as too expensive? That's all you're doing with fundamentals, by the way. So I think it's a little bit difficult to find an entry here on this. I mean, if we look at euro dollar, I think it's probably a bit of a better idea. Let me delete some of this and we'll start from the beginning again. So last week I was looking at sells on euro dollar. That's prior to obviously what we saw over the weekend. But the reason for that, and I think the idea is still there. What I do feel like though is markets are too focused on Trump right now, which is fair enough. It's kind of the main idea, shall we say. And I'm completely in understanding that if it continues, euro dollar should go higher. Perfect. But when this dies off, which it will die off, where is euro dollar going to go from here? And there is one thing that I was looking at on last week, I think it was. I was looking at the charts last week on Friday, and I noticed positioning was too stretched in terms of CFTC data. And there's a lot of longs being built up in euro quite aggressively, and it doesn't feel for me when I look at euro dollar that the optimism is there in terms of we're seeing huge amounts of positive data. It's kind of like coming in at consensus. A market doesn't move on consensus. It moves on when there's deviations away from consensus. So for me, I think euro dollar can still go lower when Trump is done, when this is all done and dusted. But for now, we think short term. We think, okay, over the next week, 2 weeks, 3 weeks, where can price action go? And for me, I would see it more long than short. Once that's dead and done and dusted, we go back to being short euro. We go back to being short euro dollar. Hopefully that makes sense, because there's two things you have to think about, long and short term. Long term, for the time being, I would say more like over the next month or two would be short, and then eventually will be long euro dollar as the US comes in lower. But I'll discuss that in due course. So for a long in euro dollar, we just look for demand zones. But like you can see here on the daily time frame, there is no demand zone unless we look all the way down there. But it's not exactly the strongest of demand zones because this is a huge gap here, or it gapped and then obviously filled the imbalance. So we now have to start driving down the time frames and seeing where is value. And I can't see any value here. I can't see any major areas of demand. So what do we do next? Does anybody know what I would want to do next? Because there's no major demand zones here, I still want to get in euro dollar longs for the short term because it makes sense because of Trump. And I'm completely in tune and I want to trade that idea. But if there are no demand zones on a lot of pairs out there, especially for equities, especially for GU, AU, dollar CAD is a good one. Dollar yen's a bit different because of, what's happening with the BOJ. Euro dollar, NU has moved quite a lot, but there's not many demand zones. Does anybody know how you would shift and adapt to price action? Because that's what you should be doing. Don't be so focused on this is what I must do. Think, open that sort of, how the horses have those little flaps that make them only look forward. Broaden that mind and think, how else can I enter this pair? Obviously back test it. You can use TradeZeller, for example, but make sure you are back testing that other strategy out there as well. So how do you adapt to price action in this instance? Does anybody know? Let me see questions. Mark, why did the yen strengthen today and had a big pullback versus the pound? That's a good question. I haven't looked at price action too much today, to be honest with you. I had a lot of stuff going on. the afternoon, so I wasn't able to even be at my PC, to be fair. So I haven't looked at it, I'll be honest with you. I haven't looked at any news mostly today. So this is kind of the fresh news coming from today. So I'll have a little look at it. I'll just sort of glance at sort of the websites and see kind of what's happened. And then I'll get back to you, of course. Whole number, correct. Liquidity, I don't trade liquidity concepts. I've never traded liquidity concepts, right? I will look at either demand zones or whole numbers. So those are the only two things I'm looking at. Because there's no major demand zone anywhere else, and I don't think we're going to pull back this deep to then pump up again. Why? Because pullbacks happen for reasons. If there's no reason for a pullback, we are not going to get a pullback. We're going to get a very shallow pullback and then a nice big push. And I feel like that's what will happen as long as Trump kind of threatens those tariffs still. And that's all we focus on. Like I said, that's all we focus on for the time being. So whole numbers is correct. So what do we look at? Where is the nearest whole number in terms of price action? So number one, you could do two things. Obviously, if you fib it up just to see in terms of value, we all know generally you want to be buying below 50%. However, in some instances, it doesn't make sense, right? We don't want to enter below 50% because a pullback below 50% is going to need a reason. If there's no reasons, we are not going to get a pullback below 50%. So where is the nearest whole number around where we're at right now? 117, as you can see on euro dollar. So 117 seems pretty adequate for me. Now, that doesn't mean, by the way, the moment it gets to 117, and this is a common mistake that a lot of people make, and to be fair, I made it myself as well. What I would do when I first started, right, which is back in like Unk days, 2018, it was, for me, what the biggest mistake that I made, and you can see it's reacted from 117 now anyway, so that's like it's an opportunity there to enter, but we need to wait for something else. The biggest mistake that I made was entering hoping price action will change direction. Meaning, the moment it taps into an area of demand or supply or a whole number, I'm going to buy it or I'm going to sell it. And this is a big mistake that I made, and I made it for a good few years until I had to kind of drill it out on myself. But the reason why I did that is mostly because of ego, right? What a lot of us in terms of traders are big on is obviously ego, of course. And you need ego in trading, right? You need to have confidence in yourself. But there becomes a limit on the charts where you have to just let price action play out before entering. For me, like right now, this would be a prime example of it. Tapped into 117, I'm going to buy it up. What you want to wait for is price action to show you it wants to buy it up. And this is a big thing that I had to drill out of myself. For me anyway, I'm not sure about everybody else, but for me in particular, that was a big thing. So 117, big whole number, cool. So what do I wait for now? Very, very simply, we go back to basics of price action. And this is a lot of things that people forget is basics at the end of the day pays, right? If you go back to basics, you'll realize that it works and you have to not forget about those basic stuff. So what am I thinking about in terms of basics? Price action basics. In fundamentals, there are three pillars of basics, which is GDP, inflation, and interest rates. Every other bit of data out there on the calendar will apply to those three. That's all you think about is the basics. And all you do now at that point is just refine your sort of fundamental view, shall we say. But in terms of basics, what I'm now going to wait for is a break of structure or a market structure shift, as people like to refer to it. All means the same thing, by the way. It's just worded differently. So I like to wait for a break of structure on the 1 hour. Have we seen a break of structure just yet? I personally wouldn't think so. I wouldn't say so just yet, but I think we're quite close. The reason for it is, yes, technically that did break below the lower high there. That made the lower low, which is a break of structure. However, this then come all the way back to the low. But what I'm thinking about now is that this didn't close below the low, which could indicate a reversal. So if we close there, people will call it liquidity concepts. It doesn't really matter what you call it. At the end of the day, it's more price action. We wait for a push above this high here to create a higher high, and then we get in on the higher low that then creates the higher high. And how do you do that? You just wait for a pullback into a demand zone. So let's say a demand zone's there, for example, somewhere when it starts to pull back. With a better idea, of course, but you get the gist, right? We always wait for a pullback into some sort of area of demand or previous highs that lines up with whole numbers. That's all we're doing. Then we now have confirmation fundamentally because Trump hasn't really said anything. And technically, it's broken structure now. So that's 2 ticks. And that is double confidence. You now have 2 things that aligned in terms of, what's the word I'm looking for? Confluence. We all know what confluence is. We all want as many confluences as possible, of course. So you can line up with, does it line up with a whole number? I don't know, here lines up with 117,250. That's another confluence. Another confluence could be, trying to think. I'm trying to think from a technical perspective. I can't think from a technical perspective because I don't really focus too much on technicals anymore. But I'm just trying to think how I would look at it. Do we then see a market structure shift on the 15-minute? Like that could be, if you want to be a bit more like safer, you could wait for something like that. So there's multiple ways of doing it in terms of entering. We all know that. We've all got sort of slightly different strategies, but they all work, of course, as long as you've backtested it. Of course, that's the main point. And you've backtested it for at least a year. Don't backtest it for a month or 2 months. That's not enough data. You need a lot of data. So backtest, years and years of price action to have that confirmation. So that's what I'll be waiting for euro dollar, because fundamentally nothing's changed and technically that hasn't changed. So I'm not going to enter yet. I need to wait for that break of structure. And that's what I'm waiting for. Is that other little checkbox? We have fundamentals still checking it. It's just this second point here, the technicals still hasn't been checked. And that's what I'm waiting for. Hopefully that makes a bit of sense. If it doesn't, let me know. Just say, Mark, you're an idiot. Please explain it again. But yes, that's kind of what I'll be thinking about in terms of price action. Seems like a lot, but like with anything, the more you do it, the easier it becomes. It's kind of like, think about it when you learn technicals, right? Technicals is obviously very difficult, and when you first do it, it kind of it's quite tricky, right? But the more you do it, the more you begin to understand it, and the more you forward test it and back test it. I would say forward testing is quite important, but the more you sort of test that strategy, the more confidence you build in it. I don't think you fully understand the strategy just yet, though. I think it takes a bit of time, but then the more you do it, the more you understand it, and then it becomes sort of second nature. So that's what I feel like with a lot of new traders out there, is that they focus too much on the short term and they don't think about the long term. That's kind of like with anything, right? So always think about the long term, because at the end of the day, the future is always going to come. So why not think about it? Let me have a little look at these questions. Sorry. What do you think the RBA is likely to hike interest rates? I wouldn't say hike, no, personally. I think they want to keep rates elevated as long as they can. I don't think a hike will come. Maybe late this year, but I wouldn't say a hike, no. I don't think any markets have priced for hikes right now. Let me double check. Where is that tab? Unless I need to log in. I haven't looked at this website for a decent amount of time. But let me have a look. Expectations for 2026. I might need to log in. If not, okay, that's perfect. So for the Bank of England, the RBA, sorry, they have 30 basis points of hikes. Like I said, I would say it's more going to happen. If it is going to happen, probably Q3, Q4. I wouldn't say it's going to be immediate at the next meeting. That doesn't mean the AED is going to weaken though, because markets are still going to be priced for such event. What you need to think about is, does the RBA, are they in tune with that idea? That gives you that guidance on the likelihood of another hike, and that would be very good for the AUD. So you then pair that idea against who is weaker. So for example, you could pair it against the likes of the yen. You can, as long as the BOJ doesn't surprise people on Friday, the AUD JPY could go higher. Euro AUD should go lower in my opinion. AUD USD should go higher this year because of dollar weakness, like we spoke about earlier. That's my long-term view. I'm just trying to think of other ones out there that would make a lot of sense. GA downside is a good one because of the BOE should be cutting. Let me double check services inflation. Like I said, I didn't really look at anything today. I was a little bit busy. Services inflation from the UK today. That's what we spoke about before. Ooh, that popped up. I don't know how pound reacted. 7 o'clock. Not much, actually. Not much. It's kind of interesting. I'll have a little look as to why that happened, but we have to always look at the underlying, obviously. Don't just look at the headline. I haven't looked at, like I said, I haven't looked at any major data today, so I can't really give you too much of a good guidance. But I would say GA would be a very good sell-off because of BOE cuts, RBA holding. Even if they hike, that's also very, very good for the AED. But even if they don't hike, the AED has a much better economy than the UK, in my opinion. Because again, we did speak about this, I think it was November on one of my November streams. Rachel Reeves, right? That's downside issues for growth, and we are kind of expecting to see that. Let me see. Does banks also see breaker structures, change of characters? Yeah. Again, there's a massive misconception, right? That these, I don't know, like I think I've said this before, but I don't get where this concept came from, that banks are out to get you, when in reality, we're only a few percent in terms of market liquidity. In addition, a huge amount of traders are B-booked, so it's not real liquidity. In addition, more traders are trading prop firms now, which is demo accounts. So the liquidity in terms of percentage should be shrinking ever so slightly, though. It's obviously, if you think about it in the global grand scheme of things, but it will cost more to take somebody out than it would to profit from them. So I don't get where this whole concept came from. They'll look at the same price action as us in terms of technicals. They'll look at the same data as us in terms of the calendar. They don't get a different NFP figure to us. They don't get a different unemployment figure to us. They don't get a different CPI figure to us. The only difference between them and us is, number one, they're smarter. Why? Because a lot of them studied at university. They studied economics and maths and so on and so forth. They wanted to study masters and then worked at a bank. And then they went off and did their thing. A lot of us hasn't done that. So what we are trying to do is we're trying to catch up, basically. There's only so much of knowledge that people can have on inflation, right, and interest rates. What we are doing as traders is trying to catch up and only think what is only important to trading. Because you have economics and you have fundamentals. There are two different things. They all fall under the same umbrella, but you can't trade economics, but you can trade fundamentals. What does that mean? Well, basically, there's only a certain amount of bits of data that is actually important to markets. Everything else doesn't matter. So as a trader, you have to identify what is trading fundamentals and what is economics. Like I said, the whole calendar we see, they see exactly the same data as us. They just interpret it better. So we have to include trading fundamentals now. And like I said, that's whether or not it's about the theme. So it's about interest rates or inflation or the Fed, like the BOE, or like, for example, we're seeing a bit of, we did see, I think it was, I'm not sure if we are saying too much, but like a couple of weeks ago, we were seeing a lot of pressure on the Japanese economics. That's why we saw further weak yen. And like I said, we don't have to learn everything. We just have to learn what's important in trading. So they don't look at the same, they have exactly the same technicals, they have the exact same data, they just interpret it better. And why do they? Because they went to uni. That's the only difference. And they're obviously a little bit smarter. I didn't study economics at uni, I studied sports therapy, which is basically like physio. How to identify an area of demand? Good question. The best way that I look at an area of demand is I always start in the higher time frame and I'll work my way down. So for example, an area of demand is where we saw a bit of selling pressure. So it could be profit taking, for example, and then demand came through for the currency. So like here, we saw selling pressure, which is on the daily, but then demand came through at a certain region. And remember, the higher time frame you go, the more likely that area of demand is going to hold. So you can see that here, the selling pressure came through. So you mark out the selling pressure. because the demand pressure came through after. I haven't taught like this stuff in many, many years, so I might be quite rusty. I'm not the person to ask for in terms of this. But that's the way that I identify. And then flip side, if we look at it on the flip side, if I try and invert it, control, nope, not that one. Shift and I maybe, nope. I'll just invert it from here. An area of supply is basically where there's been an area of bullish price action and then an area of selling in the same region. So therefore, why did people come through at that region? It could be mostly whole numbers. So around here would be 98,400, 98,500. That lines up with this previous area of supply. But I haven't taught this in many, many years, so I am quite rusty. But that's basically how I would do it. Let me see. Fed is also data driven, correct? But right now, markets aren't caring about that. They only care about the Fed. Why do you use breaker structure in 1 hour and not a 5 minute? Because I'm not a 5 minute trader. My back testing suggested that for my strategy, 1 hour breaker structures and 4 hour made the most sense. That's why you'd never basically see me go below 1 hour. For those who have followed me for many, many years, knows that I've basically never gone below the 1 hour time frame. And that's just because the strategy that I've back tested mostly only worked on the 1 hour and the 4 hour in terms of break of structure. Higher time frame you use for like the areas demand or supply, and then you go on the 1 hour to find break of structures, 2 hour to find break of structures. That's the only answer I can give. So yeah, it depends on your strategy. But like I said, you have to back test. Don't just blindly follow someone. You have to back test it. Fundamentals first, technical second. That is correct. Yes, that is very correct. Let me see. If I'm yapping too much, please just let me know. Are you watching the World Economic Forums in Davos? I am Davos. Sorry. Yes. I haven't today. No. Now the gold is going down. Did Trump say something? Good question. I'll double check. So just going to open up some websites that I would use for checking, and then let me open up Reuters as well. This isn't my background, by the way. It just changes every hour. Where is Reuters? There we go. Let me go to currencies, which is there, and then Bloomberg. Go to FX. Trends down Greenland rhetoric. Okay, so if he's toning down it slightly. Let me see. Trump will not use force to acquire Greenland. Wall Street and European stocks rise after sell-off. US dollar gains ground. Oil prices rises. So let me see. I'll read through this. But if gold is selling off, then yes, he should have said something that was basically battling the whole idea why it went higher. Like I said, I haven't fully looked into it because I haven't basically looked at any news today. But like I said at the start, if you are going to see Trump backing down or showing signs of dills, then you are going to see bearish gold. So I'll have a look at it, and then if I see something of interest, I will post it into the section of Discord, or my section. So sessions are important. Should you recommend it? Personally, I don't look at sessions in terms of like only trade during New York, only trade during London. Again, that only works if you have back tested that, meaning your strategy only works in a specific time period, only during London, only during New York, only during I can't remember the other sessions now, Asian session. So you have to back test whether or not your strategy works in specific scenarios. If it's something that broadly works, you can apply it to all sessions as long as price action and fundamentals are in your favor. That's what you basically do. But for me, I will trade at whatever session as long as I see that context, fundamentals and technicals are in my favor. That's it. Airfares were the driver for the increase in inflation in the UK in December. It's understandable, but it's come from months. Correct. So yeah, again, if that's the case, it wouldn't be important. The Fed is not going to care about it. The POE is not going to care about it. If smart money is not for us, then why do they buy retail order flow from the brokers? Good question. I've not looked into it. if they're doing that, then it would be more so for the algorithms, not physical buying. It will be more so algorithms then. What is the main problem with retail? Why do they fight against the move? I.e., if the market is, I would say it's more mindset then. I think that's a big mindset thing. So that's a good question in terms of why do they fight against the move? Meaning if price action is bullish, why are you selling into your buys? I think is more chasing the money mindset, which obviously you shouldn't have in trading. You should always have an idea of, I want to elevate myself in a way that benefits myself for the future. So how do I do that? I have to work on my mindset. Meaning, a lot of traders out there, they rely solely on prop firms or solely on personals to make money. The problem that comes, or that brings, sorry, is you're kind of in that stressed financial situation where you're kind of hoping for a payout to happen. And what you then tend to do is force trades, meaning you want to pass an account as quickly as possible and you want to get a payout as quickly as possible. Then that brings forth trading against the idea of what your strategy represents. Meaning if you only trade a pair, if you see a break of structure, demand zone, divergence, fundamentals, but then you only see a break of structure and a pullback, you haven't got the other two, right? Area of demand and a divergence, right? That's just a random strategy, but you get the gist. You're only going to take those trades if you are stressed financially, right? Where you're relying solely on prop firms or personals. So that's why if you aren't fully full-time yet, you should at least have some sort of income, i.e. whether it's from a job, whether it's from whatever, another business, cool. It doesn't really matter. As long as you have another source of income that if you have blown your account or if you have made a lot of issues of trades, you're not that stressed. So for me, the one thing that I've noticed a lot of people, especially new traders, is that this is the most common theme among them from my personal, from when I've spoken to people. I'm not sure about others. I'm sure you can more than welcome to drop it in the chat. But for me, that is the most thing that people have. That's the most common theme among people. Any giveaways? Oh yes, correct. Sorry, yes, I forgot about that. Just type !join in the chat. Today we have. Let me just double check. Apex, Funding Next, and 3-month Trade Zealot. So Apex, Funding Next, and let me just move this camera over slightly. There we go. Perfect. Apex, Funding Next, and Trade Zealot. Just type !join, and then it will add you in. Yeah, I completely forgot about that. Sorry. No, I love when someone talks about fundamentals, not just technical for value ups. Thank you very much. It's obviously very difficult. That's the only issue, right? It is very, very difficult, and not a lot of people are willing to do it. And again, people always talk about doing something different that other people are doing, but they don't do something different. And that's what I thought when I first learned fundamentals, which is, like we know, during COVID. Where can a personal learn fundamental advice for free and channel? I have made some stuff on my personal YouTube, like basic stuff like monetary policy, interest rates, inflation. Other ones out there, you have to be careful because there are there's different, like I spoke about earlier, there's a difference between economics and fundamentals, like trading fundamentals. You can learn economics, but you can't apply it to technicals. Like you don't know the application to technicals. So for me, it's like only learn the 3 basic stuff, which is interest rates, inflation, and GDP. You can use YouTube for that if you want to. That's perfectly okay. Then that starts a good baseline, meaning you now know roughly what drives markets. Then other stuff out there is like extra nuggets, like if PMI data comes out, which is a forward-looking indicator. Basically, it gives us a guidance of what could happen in the future. That might suggest that inflation in the future might come in a little bit hotter. So maybe you could trade the dollar a little bit higher in anticipation of that stronger CPI. Because what that would mean then is the Fed may not need to cut as much. So what you're basically, or not cut as much, but if the context is there, maybe a hike in the future, which is really good for our currency, which is why somebody asked earlier about the RBA. So only learn the basic three stuff, which is interest rates, GDP, and inflation. And then monetary policy is like another bonus one. And everything else just adds to those three narratives. Maybe there is no war and tariffs gold. Correct. Yes. Do you know Trade Nick? Yes, I do. Yeah, he's quite a good guy, and he's pretty good. I do have other streams. Yes. Obviously, during trading, when I first started, I was working. So I worked at Asda, which is Walmart, by the way, for those who are in the US. Obviously, Walmart owns Asda, it's a subsection. I worked at Weatherspoons. If you're not in the UK, it's basically like a pub chain. I worked at Apple. So that was before I went to uni. Obviously, I saved up a decent amount because Apple at the time did pay a good amount. And obviously, when I was 18, it was pretty good pay for an 18-year-old. I worked on the Genius Bar as a TS, which is a technical specialist. What else did I did? I worked at, I'm trying to think of other ones. So a little bar just below my uni accommodation. And then, trying to think of other ones. This was many years ago. I think those are the main ones. And then, yeah, I'll use that to fund my trading and my education, because education and trading is both important, of course. And at the time, prop firms didn't exist. So it's a little bit unfortunate. And a lot of people do have it quite easy now, because back then you had to use personal account. You just could not. There was no such thing as a prop firm. If there was something, it was slightly named differently, but you basically had to do a tester account, and then you had to do multiple months of testing, and you didn't get paid, and then, yeah, it was just a ball ache. So yeah, that's basically what I did. But I do have other streams now, yes. Economics and geopolitical fundamentals, some difficult to trade. Yes, again, what you're basically trying to do is filter out the BS that you see on the calendar and only focus on what is important in trading. Like, that's the difference between okay traders to really good traders, is the person who is able to cut through the lot of the BS that you see on the charts or you see on the calendars, basically. Do you trade Forex? Yes, I do. I've done that for about 7.5 years. Do you live in Europe? Yes, I live in London. So let me get that list that we've had. Let me copy that list and I will spin it. So like I said, let me just copy this list. So this is at the time that the list was given to me, which was not too long ago. Let me open up this. So what we have today, like I said earlier, was Apex from the next and 3-month trade Zella. So first one is obviously Apex. For those who have never been on the stream before, the way it works is we spin your name. I'll give you about 30 seconds to 45 seconds because obviously there is a bit of a stream delay. And then for stream snipers, of course. And then what happens is that if you're not here, you get removed. If you are here, you say you're here in the YouTube comment section. And then what you do is within 24 hours, you basically just create a ticket, say you've won something on my stream, and then they'll give you the details on what to do. That's basically the rundown. So here is the list, and I will have a little gander. So let me just double check if there's any other questions. Do you guys trade New York? Like I said, any. Most of my trades generally happen towards the end of London, beginning of New York. Like, there is no specific time for me personally. That's just my own strategy that I've back tested. Like I said, back test your strategy. If it works during a specific time, then you trade only during that specific time. If it doesn't and it works everywhere, then obviously you have that idea of doing it. So yeah, let me spin. This is for an Apex account. Let me have a little look. So we'll spin and we'll have a little gander. M-Lord off. If you're here, chuck yourself into the comment section, say you're here, and then we'll do it. If you were missed, I apologize. It's just that we have to take a list at a certain point and then start. So we took it at the time maybe before you entered. I'm noticing these days Asia's session is more volatile instead of New York, at least from the last 3 months. Maybe I like I said, I don't really trade during specific time periods. So possibly I just haven't really looked at it, to be honest with you. They need to give you direction. You get a good trade. Let me see that question. I'm just double checking to see if there's any other questions I've missed. I don't think so. Yeah, I don't think there is. If there are any questions, obviously, like, you know, that you're more than welcome to ask them. So perfect. I see you're here. Let's remove you and start the next one, which is for a funded next. So like I said, drop yourself in the comment section, say you're here, and then open up a ticket on the Discord within 24 hours, please. Just makes it a bit more fair. Boing boing bazooka. If you're here, please drop yourself in the comment section. If not, you will be removed. Like I said, I'll give some sort of delay. How do I know if I got into the giveaway? If I see other people's posts disappear but not mine? Good question. One of the mods will be able to answer. But yeah, it depends on how, like, the time you entered or like the difference between the time you entered and the time I got the list. So like maybe you entered 20 seconds a bit earlier, or not a bit earlier, a bit later than when I got the list. So one of the mods I'm sure can answer that. Cool, you're here. Perfect. Let's remove you. Remember, please open up a ticket within the Discord. Otherwise, it just adds complications. 3-month trade Zeller. So this is, like I said earlier, and I was banging on today about backtesting. Backtesting is very, very important. Please do it. Like, you've got tools nowadays. Back then, we didn't have tools. We had to do it by hand and manual labor. We had to go back and go to a specific year and then use the replay tool and then go back and try and, like, nowadays you've got it very, very simply. So yeah, please use backtesting tools, especially like stuff like TradeZeller. So this is for TradeZeller. Let me spin the wheel and we'll have a little look. YT Duffy, I saw you commenting earlier. If you're here, please let me know. If not, we'll obviously remove you and we'll spin again. So yeah, if there are any other questions, please let me know. I will be stopping streaming in about roughly 5-10 minutes by about 6 p.m. my time, GMT. But yeah, I mean, in regards to the markets this week, it's actually pretty simple to trade because all you're focusing on is Trump. If Trump says something that markets are in happiness with, you buy the dollar, i.e. less rate cuts, then, or not less rate cuts, but less need for tariffs. Perfect. You buy the dollar, you buy equities, you sell gold. If he says stuff that is allowing tariffs more to come through and there's no signs of what's the word I'm looking for? Resolution, then the dollar remains weaker. And it's quite unfortunate to trade. It's just one of them ones where you kind of have to keep up to date with news. It's not like normal fundamentals where you have an idea and a view, you stick to that view and you just watch data to see if that view has been battled or not. Now you kind of have to actively stay on the news. So apart from that, yeah, that is the giveaway. Perfect. I see that the guy is here. Amazing. So yeah, I mean, I don't think there's any other price action to look at. Let me double check some docs actually. I think I did have some stuff up earlier. So let me just open up this doc over here. And I want us to have a little look at some good docs. Let me make this full screen. It'll probably look a bit easier on the stream. Perfecto. And then that tab. And let me open up this tab as well, which is this one. So obviously this research, right? The bank research, a lot of it is not really out to get you, because what happens is, right, is like a view would happen and then something changes, and then obviously they don't update it in the PDF or whatever until a week or two later, But then what happens is people blindly trade that idea because they're a bank. You should never be doing that. You should be using it roughly as an idea, or basically use it as like a confluence bias for your own views, saying like if you're bearish the dollar because of X, Y, and Z, and you've done research, and then other people are saying that in terms of banks, then you're in the right lines, right? It's not like you're now up to get the retail traders, right? That doesn't make sense. So a lot of this research can be delayed is only because things have changed during that period. It's not because they have purposely put stuff out to take people out. This stuff you can't really get online for free anyway. You have to have some sort of portal. I want to trade a funded next CFD account. What size is it? 10K. What else do I do? Want to know. I'm not too sure. Other people out there who do trades funded next will be able to do it. Favorite pair? Probably euro dollar right now. At least over the last year and a half to 2 years. Previously it was... A really common one I traded before that was Euro CAD. And then some of my biggest trades was GU though. GU. And I did make a few videos on that on my Insta about the trade we entered. I think it was 138 when during 2022. And obviously at that time, the Fed was hiking rates quite aggressively. The UK was also hiking, but because of context, because UK growth is poor, hiking rates hurts growth, remember. So by them hiking rates hurts growth that is already poor. So an idea was that you sell GU because you don't want to invest into the UK when there's issues with growth. So what we did was basically sold GU. I think it was 138 around that time. I'd have to double check. And then we held it all the way down throughout 2022. And I think we exited post Kwarteng and Liz Truss era, and I'm not sure who remembers them who are in the UK, but Kwarteng and Liz Truss basically were doing unfunded tax cuts, which creates issues for confidence, and the UK pound market slumped. Bonds rallied, or yields rallied, obviously because of financial stress. Yields do climb in that environment, and that's bad for a currency when you see weak currency but high yields. So that's when we exited post that period. So GU was my favorite pair 2022 for sure. What prop firms do you use? I've only recently started, like I said, last year, November, December, I have started trading prop firms only because people that I know who are very good at prop firms, I'm sure you've seen them all over the internet, have told me you need to try prop firms. Please try it, because I've always used my personal capital, and that's because that's what I was used to. So trading prop firms was kind of alien to me. So I have started, and when I get a good idea of who is good and who is not, I will tell you exactly who I'm trading with, because I don't want to say something that I'm trading with, then you go with them, and then they aren't very good. Like, I don't want to do that. So when I know who is perfectly okay, I will definitely tell you. Do I trade my own personal capital? Yes. What's your take on Euro this year, considering that the ECB is in a good place? So if that's the case, Euro longs, right? If they're in a good place, meaning they don't want to cut anymore, why don't they want to cut anymore? Because inflation is pretty steady and growth is good. Growth is expected to climb for Europe this year because of what happened last year with Germany. Germany last year, around February, March time, I think it was around that, they did a lot of good fiscal stimulus, or their idea for fiscal stimulus was very, very good. This should support growth for Euro this year. As a result, support the currency as well. So therefore, Euro goes higher. The only issue is that's a long-term view for this year. You are going to have short-term views right now. So you have to now pair the short-term with the long-term. And does it make sense? If it's a perfect yes, then you enter. But apart from that, I don't think there is any other questions. Obviously, we've covered a decent amount this year. Today. Obviously, the way to trade right now is just follow the Trump. And if Trump further shows willingness to be open, then you would want to remain bearish, not bearish, bullish the euro, bullish the dollar, bearish euro dollar, bullish equities, bearish gold, because it's completely opposite to why price action was so strong in the first place. So like your gold is so strong because of what was happening with tariffs. Well, if that's going away, there's no reason for gold to be this high anymore, is it? It will pull back and then eventually pop up, because it still makes sense for it to go higher this year. But we need a pullback. So that's something to consider as well. So apart from that, I don't think there are any other questions. Obviously, if there are questions, you're more than welcome to at me in the Chart Fanatics Discord. But apart from that, everybody, have a good rest of your week, and I will see you next Wednesday, everybody. Take care.